And brokerages remain positive on Godrej Consumer after its Q3 performance, with both HSBC and Macquarie maintaining their buy ratings. Mahima joins in with more details. Mahima?
Right, so Sharad, I think probably the street is, probably profit booking today in terms of where Godrej Consumer stand, because overall, if you take a look at the numbers, largely in line with what the street was expecting. Of course, flat profit growth is something that probably the street has not liked, and that's why we're seeing that downtick of around 5.6% in the stock. But overall, domestic volumes were strong. Even in terms of margins, the margins are back to the normative guided range that management had, and they've said that they will remain in that range of 24 to 26% going forward as well. But home insecticide is where the pressure is. Of course, EBITDA was also a beat, largely led by India performance, but home insecticides still is underperforming, and the emerging categories are something that are still weighing on GCPL. So these two categories is something that we'll be watching out for in terms of recovery going forward. In terms of the brokerages that have come out, Investec has downgraded to buy to hold from buy with a target price of 1317, which they've hiked slightly. But what they're saying is that better emerging portfolio to aid normalization of volume going forward. I mean, this will happen only if the emerging category actually picks up going forward. In terms of the volume growth, that will normalize in Q4 is something that they're expecting. And if that happens, then only volume growth will go beyond that 8% mark. Minimal consolidated EBITDA margins to slow year-on-year growth from Q3 FY27 is something that they're believing in. And implied PE multiples right now at 48 times for FY28 limits the re-rating potential for this particular counter. Fair valuations and revenue growth volatility limits the stock price upside is what they believe. And lastly, they are trimming their FY26 estimates by 4% and 1 to 2% for FY27 and 28. So this is Investec's view, of course, but Macquarie and HSBC have maintained buy with the for HSBC the target price is 1470. They're saying that domestic volume growth was strong. Overall, home insecticide recovery and raw material price stability is something that they'll be watching out for. And for something like Macquarie, they've maintained buy, but with a target price of 1400. Inline Q3, signs of Indonesia demand stabilization is something that they're looking at. Of course, Q3 EBITDA was also largely in line. Indonesia strength offset slightly by a miss in terms of where Africa business stands, but EBITDA was also largely in line. Going forward, same thing. They're going to watch out for as to how home insecticide performs and how emerging categories are doing for the counter. So largely, I think it was in line with what the street was expecting, but I think on account of flat profitability and probably some profit booking is why we are seeing the negativity on the counter.
Right. Thanks a lot, Mahima, for that. Interesting stock, but we'll give in more perspective to it. Earlier today, we spoke to Asif Malbar. He's the CFO of GCPL to get an insight on the company's growth outlook and the quarter gone by. He says that the company aims at a 2 to 3x growth in the next 3 to 4 years. Let's listen in.
So I think on some of these acquisitions, it's less to do with growth. It's more to do with what's the overall size of price. And over a 3 to 4 year period, can you kind of multiply the business rather than what is the percentage growth? So I think that's the way we would see it. And hence, it's not about a quarter or two, but say over a 3 or 4 year period, can we kind of get this business to become, say, 2x, 3x of where it currently is?
Okay, all right, let's talk about Godrej Consumer Products and a bit of a surprising reaction to the stock price that I saw this morning, and the stock is trading with cuts of about 5%. The reason I say it's a little surprising is because the numbers weren't too bad. In fact, volume growth is decent. You have the India business that has had its EBITDA margins move towards that 25% mark, 24.8% mark, and a bottom might actually have been hit for the Indonesia business as well. We've got Sunny Agarwal with us. Sunny, what did you make of the numbers? And I wonder if you listened to the conference call where maybe the street didn't like the tone of what the outlook is going forward. Is that it? And are you surprised by the reaction?
Yeah, good afternoon, Alex, and thanks for having me on the show. I think, yes, I'm really surprised by the reaction. In fact, pretty much in line with expected number, very strong volume growth. And in fact, management is looking forward to take the domestic business volume growth to a double digit in the next year. And at the same time, home insecticide segment, which has been impacted. So in case the summer is normal going ahead, then that segment can again pick up going forward. So I think pretty much in line with expected numbers. Maybe the margin which has been protected in this quarter was predominantly due to the cost saving initiative which company has taken. So rather than operating leverage, it was a cost saving initiative which led to the cost saving in the on the expense side and led to a kind of stable margin in this quarter. Maybe that would have been one of a factor. Going forward, as the volume picks up, maybe operating leverage will also start kicking in, and that should give a lot of comfort to the street. Another point is, as discussed by Mahima also, the valuations are slightly stretched to maybe trading at closer to 45 to 48 times FY27-28 earning estimate, and that is one of the reason where relatively look expensive as compared to Godrej Consumer. Seems like Tata Consumer and Asian Paint have reported a decent set of numbers. So Marico again is likely to report a good set of numbers. So I think it's a relative call which one has to take among the consumer staple companies. So on a relative basis, seems Godrej Consumer is not looking good in terms of risk reward ratio as we speak.